Good day traders, Stacey Burke from Stacey Burke Trading. Following up on our levels today with the British pound crosses Tuesday, March 31st. Yesterday we had a micro trend line break on the British pound. That market pushed up into the upper part of that 250 pip box. We had a micro trend line break as that market went sideways, and then this morning we've pinned down to that lower 2250 area. We still have a rising trend line and a double triple bottom rectangle that we broke out of last week. That first full expansion has been hit, and we are currently trading inside of that upper 250 pip box. Yesterday traders had a 1, 2, 3 to the low of the day that hit the rising trend line. We had an engulfment. Traders may have entered in on that engulfment at numbers, but they also run the risk of possibly being caught in a measured move down. That second candle closing back inside the low of the day gave breakout traders the chance to retest that high for their 50 plus pips move back up just prior to the US session. That was in the last hour of our 12 candle window at the low of the day. And as that market headed into the US session, selling came down and eventually sold off this morning from that 2400 level. Just wanted to point out that that measured move we talked about yesterday with the double top that formed in early Asia was pinned and hit, stopping out traders from Friday's US session that would have been either holding on to profits or had break-even stops in place. That pin would have taken those out. We've already hit yesterday's low. We've had one push, two pushes. We may get a third push down. This 2300 level could act as support for a breakout pullback and a retest of the high, or this market may squeeze down low and retest that pin from this morning. So for now, we're inside of this 100 pip box. The market has sold off at 50 with a falling micro trend line. I need to see that micro trend line and a retest happen before we see anything, but we will be looking for that in our 12 candle window in the London session. The pound New Zealand also retested the high of that upper 250 pip box yesterday at 750. That market has since this morning fallen and tested that lower end of the 250 pip box. We had a micro trend line break. We do have a somewhat of a version of a double top forming in here, and we still have our rising trend line intact. So for now, I would still feel that this is a range bound market. Yesterday, the pound New Zealand had a micro trend line break and then a retest to the low towards the that last hour of our 12 candle window. Then we had our engulfment at the 50 level inside the low of the day for a retest of the high. And that market gave us pins up top, stop hunting back inside before giving an M formation double top and falling over this morning. This morning that market has sold off from our 600 box level. They've stopped out yesterday's traders and taken out the low of yesterday. So we have breakout traders currently in the market. We do have a pin and a bit of an engulfment pattern that's formed inside of that low of the day. How that market now handles this 500 level, this could be setting us up for a low of the day, one push, two push, possibly a third push for an engulfment and a retest of that high. Just as we speak, we'll be watching that closely to see how that closes heading into that Europe-London crossover. The pound yen, again yesterday we talked about it being squeezed up inside of this upper rectangle after moving strongly off of the lows last week and the week before. We're currently squeezed up inside of that high from 2 weeks ago and in that upper 250 pip box. Yesterday, this market has a measured move taking us somewhere up around that 3,700 area. But this market, depending on how it handles this corner, the further it goes, the less likely that move probably is to happen. If that is going to happen, it should explode out of there fairly quickly. Yesterday we had that market come down in Asia with that double top with 1 push, 2 push, 3 pushes to the low, coming back inside and then retesting breakout traders into that end of that 12 candle window before going to the high of the day and giving us that second leg engulfment at the high of the day as we headed into the US. That was in the first hour prior to the US Open for a stop hunt back inside of the range. Today we've seen that market pin the upper 400 pip box and sell off from there. We're still technically inside of yesterday's range, so this is an inside day. And I'm always a bit cautious on the inside day until we get one extreme tested. And currently, we're our lower end of that pin bar that printed this morning, that 100 pip range, candles between 3,300 and that 3,400 pip box. Depending on how this market handles 50 heading into the changeover, I'll look for something either up high for a sell or some sort of double bottom formation down low. This market still is rising up from that 4-hour trend line. As we squeeze sort of into that upper box, this market could be preparing, and we have a peak formation on Friday. If we squeeze up here, this market could roll over and retest the lows of the week. Again, important to remember that that is an inside bar at this time. Pound Swiss, again, we had a micro trendline break yesterday. We retested the highs from 2 weeks ago, stop hunting. Then this morning, again, like the other pairs, pinning down to the lower part of that 250 pip box. We still have a rising trend line that's intact. Yesterday, traders would have saw the engulfment in that last hour at the low of the day, retesting the high of the day. We had a micro trend line break into that Europe-London changeover, then 1 push, 2 push, 3 pushes down in an engulfment for the retest of the high. That market sold off from 1900 yesterday. We'll just extend that across. Drag that over. So it didn't quite get there this morning, but obviously it's traded into that upper part of the box into the close before trading down, bouncing off of 50, pinning the low from yesterday and stop hunting the breakout traders. Again, just pay attention to this. You'll see nobody gets a free lunch. And currently this market is trading into the 50 level. It is possible we could see a retest of that low before this market takes off. Still in an uptrend on the 4-hour chart, but again, we've had quite a strong movement. So it'll be nothing to see this market retest the lows, and we'll just put that back in up top. But currently, again, in our 100 pip boxes, if we were buying low or selling high, this is our area. I'm staying on the outside until we have evidence of one of these areas being worked for a rebound or a breakout pullback for a retest of the lows. And again, just keeping it simple until we have something that gives us some clear directional bias. We want to stay out of the middle of this trading range. Pound Canadian, again yesterday, continued its strong movement up. We, even on the 4-hour, had a nice pin bar that printed into that London session, rocketing up and then consolidating before rolling over and retesting the lows this morning. But we still have our rising trend line intact. We did expect some degree of a pullback after that market going vertical, but we are in that upper. We had one full expansion. The market traded through it. We're still currently in that. The market's testing 7,500, but this market has enough juice in it that it could possibly extend that out for another full extension of that range and possibly even retest that 7,750 area. Currently, we have a market that's broken out of that 7,500 area yesterday. We had a couple of trades that again happened at the low of the day. We had in that 12 candle window, we had pins and engulfment. We had the people just watching again. The market pulled back. They hit the low again. They hit it again. Pin bars engulfment, hammer at double zeros, breakout pullback to continue the move. And for breakout traders who were paying attention, they would have saw the doji and then the hammer and then the doji and then the hammer right at the high of the day. This is a classic breakout trade, a 1-bar stop for a measured move to follow through on that move. Today, that market has broken back inside of the 100 pip box, but as you can see, it's auctioning sideways at double zeros. We've had a pin stop hunt down to the lows. This could be our low being in place, but again, it depends how this market handles this into the changeover. We either need to see some sort of engulfment or double bottom formation with an outside structure, possibly print first. We may see a bit of a pullback stop hunt on traders who were short in Asia, and then a retest before that market continues its move up. We're currently inside again as the other pairs. With that in mind, just keep in mind that you want to be staying to the outsides of this market, be buying low or selling high. And if this market does continue its move up, we do have a possible 250 pip extension on that target. Currently though, just staying sideways at the double zeros. I'd be looking for a buy low setup or a sell high scenario that may retest the low on that pin bar. And again, the pound Aussie yesterday, again, a bit of a choppy range bound day. We did have a micro trend line break, bit of volatility, but almost an engulfment on the 4-hour that's printed. That market went sideways and then broke down this morning. We have had a trend line break, therefore that market is retesting that 2000 level right now. On our 15-minute chart yesterday, we had a great setup at just after our 12 candle window, but again, the market created a low in Asia. They hit it again, they pulled back, micro trend line break, retest, 1, 2, 3 to the low, and engulfment with pins on the bottom at double zeros for a retest of the high of the day. This is textbook. You should screenshot these setups. Again, we had an engulfment happen at the upper 50 pip box heading in towards that first hour of the US session. That market then again broke down to stop hunt traders who were long. And then this morning we've had that sell off underneath from that upper 100 pip box. They've pinned traders who were short into the late US session. That market's broken down, but also it's given us an engulfment. And this 1-bar engulfment could act as our lowest bear candle. We'll see if they protect this area. If they protect this, we'll be looking for a buy low scenario. This market should not close back inside of this range below 50 if they're going back up. Again, similar to the last pair, I would look for an outside structure to print first, giving us a buy low scenario if that was the case. If not, this market may pull back, stop hunt towards the low of Monday before rolling over. You can see there's been no gaps left up top, but this low of the day will be interesting to see if they protect that. Again, for an outside structure to print and then a retest off of 50 or off of double zeros for a long trade going back up towards the high, and again even going as far to go after traders who are in the money from last night's US session. So again, traders, keep it simple. Wait for trendline breaks. Stay on the outside. If it's an inside session, be leery of being caught on the inside. It's important to keep it simple. If it doesn't look simple and you're not on the high or the low, just wait for something that's safer. Often some of these trades that are inside of the middle of the range are traps, and they don't move anywhere. They catch you in the middle, and then bang, they hit the higher, they hit the low, and stop out traders who are caught in the middle. So stay disciplined, stay focused. Hopefully you had some value from today's videos. Look for the double zeros and the 50s to act as support and resistance. Stay disciplined and have a great trading day.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.